the chief of New York's financial regulatory body, said Tuesday that the agency is fiercely opposed to the U.S. Treasury Department's recent endorsement of regulatory sandboxes for fintech firms. In a statement published on the Department of Financial Services (DFS) website, Superintendent Maria T. Vullo said, "The idea that innovation will flourish only by allowing companies to evade laws that protect consumers, and which also safeguard markets and mitigate risk for the financial services industry, is preposterous." The strongly worded comments come after the Treasury Department released a report Tuesday describing how non-banking entities, including fintech firms and data aggregators, should be regulated, recommending the creation of regulatory sandboxes to promote innovation. In her response, Vullo Riley added, "Toddlers play in sandboxes. Adults play by the rules." The New York regulator then hit out at a Tuesday announcement by the Office of the Comptroller of the Currency (OCC) that it will begin to accept applications for national bank charters from non-depository financial technology companies engaged in the business of banking. The decision helps provide more choices to consumers and businesses, and creates greater opportunity for companies that want to provide banking services in America, said Joseph M. Otting, Comptroller of the Currency. Vullo said the DFS is also strongly opposed to the OCC decision. Such a move, she said, is clearly not authorized under the National Bank Act, and would impose an entirely unjustified federal regulatory scheme on an already fully functional and deeply rooted state regulatory landscape. When asked if the charter applications could include those from cryptocurrency and blockchain startups, Brian Hubbard, OCC Public Affairs Officer, told CoinDesk in an email, rather than focus on a particular technology, the eligibility for applying for a special-purpose national bank charter is predicated on the company, or proposed company, engaging in at least one of the three core businesses of banking: taking deposits, paying checks, or lending money. To the extent that a company performs one of these activities, they would be eligible to apply. The decision was made after almost 2 years of deliberation that included 2 public comment periods and conversations with hundreds of stakeholders, he noted. The New York DFS is notably the body that governs cryptocurrency firms in the state and somewhat controversially developed the BitLicense framework for approving and registering crypto startups. The agency has been criticized for setting a perhaps too high bar for exchanges to operate in the state, and to date only 5 companies have been issued a BitLicense, with the latest being Genesis Global Trading in May 2018. The other 4 firms to be licensed in New York are Circle, in 2015, XRP2, a Ripple subsidiary, in 2016, and Coinbase and Bitflyer in 2017. New York Image via Shutterstock. The leader in blockchain news, CoinDesk is a media outlet that strives for the highest journalistic standards and abides by a strict set of editorial policies. CoinDesk is an independent operating subsidiary of Digital Currency Group, which invests in cryptocurrencies and blockchain startups.